Hi, this is Zach Meir with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe, starting on with the FTSE 100, which remains as dead as a dodo within a roughly 50-point range, 7,700 being the recent peak, and the floor of the range around the 50-day moving average at 76.27 at the moment. We're thinking that this is a symmetrical triangle consolidation, which should hopefully lead to a move to the upside, 78.50 by the end of the month, although at the current rate of progress, it could be by the end of the year. We break back below the 50-day line, then it's the 200-day moving average there at 75.40, which could be the destination. But as I said, dead as a dodo here, so any calls probably need to be taken with a pinch of salt, even more than usual. Moving along to the DAX, and here you can see that it's hugging that previous September resistance line target around 17,900. Proper clearance of that, 17,900 plus, and we could be looking at a target towards 18,400. We're giving that till the end of next month, but if it does move, it hopefully move quicker than that. On the downside, late February resistance at around 17,500, the favoured destination. Worst case is 17,200, the floor of that rising October trend channel. Onto the Dow, and here you can see that we're trying to break that we're trying to break that February resistance line there. That's around 39,000. End of day close above that. And we're looking to push towards a 41,000 plus target by the end of next month. On the downside, which probably is more likely, testing the 50-day line and February support around 38,000 may have to be done before any move to the upside. RSI still holding just above the neutral 50 level, so that is a plus. The market at the moment remains Bitcoin, the talk of the town as well, and here you can see that consolidating very well. In fact, you could argue that the late February breakout was a mid-move consolidation bull flag, and it looks like we've got another one here based around 65,000. That suggests that we're strong enough to perhaps deliver a new leg to the upside, which would be along the lines of the lines I'm about to draw now, which hopefully will excite a few people. Here we've got a rising trend channel heading towards 81,000, and that could be seen by the end of the next month while we remain above the 65,000 level. If we do have to break down, it'll be back down to 60,000, but even 60,000 wouldn't kill the idea of an imminent move towards the 80,000 level by the end of next month. And obviously the end of next month coincides with the halving of this market. Moving on to gold, which has turned into, so I think it's copying Bitcoin at the moment. In fact, a very clean break to the upside here, hitting our top of our rising trend channel there. That's currently around 21.90, and I think we're just shy of that at the peak there. But 21.90, the target there, we were looking at 21.80 by the end of this month, and obviously we've been ahead of schedule on that. Maybe a little bit early to look for a new destination here, but one possible area would be the line I'm drawing at the moment, up towards the 2260 level. That's a July resistance line projection. Maybe that could be on tap for the end of next month, especially given the way that we've had a logjam around the 2000 level for so long. And now that that's breaking, we could actually see the market surprise on the upside. Moving on to the stocks, and starting on with Barron Oil, which is obviously in a rather sickly place at the moment. The positives, though, are that we managed to close above the initial February support there around 0.5, and above 0.5, looking for this market to head up to 0.7, even if it then falls back again. Obviously the decline from the February peak, a complete disaster in terms of being a one-day wonder, etc., etc. But ideally we stay on the right side of 0.5 and then progress up to 0.7 or so over the next 2 to 4 weeks as a best case scenario target. Moving on to Cadence, which was one of the stocks of the week, which is always nice to see. Here, in fact, just noticed the way that this was a bear trap gap reversal. Maybe I said that before, but the view here was that above the old support there from back in October, 4.75 pence, we would hit 6 pence during this month. We've obviously done even better than that, peaking at the 200-day moving average at 6.6 pence. Overall, looking for this market to head back up to around 8 or 8.25 pence by the end of next month. I think that would give it a lot of time, especially while we remain above the now rising 50-day line at 5.25 pence. In the Barron Oil setup at the moment, we have Echo, which after breaking a trend line there from back in January around 0.5 4.5 actually fell on Friday. There's the risk here of a move down to a support line projection from back in January as low as 0.3, and that remains a possibility while we're back below 4.5. But the ideal scenario here is that we don't make a new low, even though Friday's price action was rather weak. On the opposite end of the spectrum is GCM Resources, which blew the doors off on Friday. We already had our target there around 4.7 pence, which came in the wake of the gap close buy signal that we had on the 29th of February, i.e. the market closing above the top of a previous gap there at 2.68. The view now is that the longer we stay above the old June peak there at 5.8 pence, the greater the chance of a move up to, quite a healthy move in fact, up to the 9.5 pence area, which is a summer 2022 resistance line projection. So above that old peak there, around 5.8, looking for a pretty decent 9 pence plus target, hopefully as soon as the end of this month. Moving on to a stock which will hopefully reflect the glories of gold at the moment, Golden Prospect, and here we haven't looked at this stock for a long time, but decent price action, consecutive day rallies there, very strong candles, most of them opening at the low and closing near the high, which is normally very, very bullish. We actually managed to close just above the old December peak there, around 30.6 pence, and well, just on that, in fact, 30.6 pence, and above that, looking for this market to head up to as high as 41 pence, hopefully by the end of next month or even sooner. And it looks as though this is a major trend change in terms of the candles and the price action on that stock. On to HeliumOne, we're on the edge of our seats, or some of us are, to see what happens next. The bottom of that gap there from the beginning of February at 1.42 pence, the close 1.49. Ideally we bounce either there or at the 50-day line at 1.33 pence. Below 1.33 pence risks a move down to the floor of that channel there, around 0.9 pence over the next couple of weeks, but ideally the shares stop at that 50-day line or near to it. Obviously the key reversal down on Thursday and then the very bearish candle on Friday with the open at the high and closing near the low makes it quite a popcorn event to keep your eye on there. Onto a stock which I don't think I've ever looked at before, which is quite an achievement. It's Helus Underwriting, and the attraction here is that the rally started with a bear trap gap reversal. That was back in October, and then the price action since basically May last year is an inverted head and shoulders, a sort of slanted one. Neckline there at £1.49, well basically where we closed, £1.48. And above that, looking for the top of that rising trend channel from August as high as £1.70 as soon as the end of this month. It looks as though this has legs, especially with that, well, we had two very strong candles, one on Thursday opening at the low, closing at the high, and the same on Friday, but that was a very strong move. It was as if something exciting is going to happen there. Not quite so exciting yet is i3 Energy, but it's still making efforts to break that trend line there from back in October. The level in question around 9.5 pence. Want to see an end of day close above that to give us up to 12 pence over the following 2 to 4 weeks. Hopefully, when 9.5 does break, then we will see some action there after a long time. Itaconix is next. I think I'm the only person who actually talks about it, looks at it, but here we had an unfilled gap to the upside back at the end of February. We broke the gap high day quite easily, and we're heading towards our first target there at £2.35. Above that, looking for the upper parallel of that target as high as £3 by the end of next month. Obviously it's a punchy call, but it's a punchy chart as well. On to Lansdowne, which hasn't featured here for quite some time, as you can see, as you might be able to guess from the chart. Here we had a great massive key reversal to the upside, also a gap close buy signal there above 0.95, and in fact the resistance line projection there at 0.15.5, looking for an end of day close above that to then get the shares to deliver further gains, perhaps up towards the bottom of the May gap as high as 0.25. So basically the message there above 0.15, looking for 0.25 by the end of next month. Ideally we stay on the right side of at least the 50-day moving average around the 0.1 pence level. Moving on to another head-scratching situation, and this is Mosman. Here you can see that we're still grinding away there against a rising 50-day moving average, so I am expecting a move to the upside relatively soon. Amazing that we are still bumping above that particular level. We do have the big breakout through 0.18, 0.18, then we're looking for 0.03 by the end of next month or even sooner. Narf is next, and here we've had a vertical move in the recent past, hitting our first target there around 1.1 pence, second target there at the end of the week 1.35, above 1.35, looking for an old 2022 resistance line projection as high as 2.2 pence by the end of next month. Ideally we stay on the right side of the 1.1 pence area in the meantime. On to Premier African, and amazing, no RNS, so maybe there was something wrong with the RNS system this week, but here you can see we're still bouncing above the rising 50-day line, so that does suggest the price action here is half full rather than half empty. We also bounced off RSI 50, so still looking for 0.4, 0.41 over the near term, maybe in the next week or two, while we're above that 50-day moving average at 0.26 on an end-of-day close basis. Next up is Sondrel, which I've got a soft spot for on the basis of the Neuralink connection, or Neuralink link maybe. Here we've got the shares consolidating above a rising 50-day line, sideways shuffle as I call it, and nice end to the week as well, so that might suggest that early next week we'll see some action. Looking for 25 pence, or I am, by the end of next month. If you're cautious, maybe you wait for an end-of-day close through the recent resistance at 13.25 before deciding that it's safe to assume a decent or a significant upside there. On to the last three. First one is Tlou, which also doesn't make very many appearances here in the Bulletin Board Heroes. But here we have broken out very nicely through the old resistance, autumn resistance around 1.8 pence, above that. Looking for 2.8 pence as soon as the end of next month or even sooner. The other added plus point is that we've got the 50 and 200-day lines both rising. That means we're in the run-up to a golden cross, which tends to be the strongest part in the cycle. On to Tower Resources, and here we're trying to copy, we seem to be copying the Mosman chart with the sideways shuffle along a rising 50-day line, well, at least a flat 50-day line, which is almost as good. The longer we stay above 0.02, the greater the chance of a move to 0.35 by the end of next month. Obviously, if you're cautious, you wait for at least a break of the 0.023 level, which we have peaked at twice over the last week. Finishing off with a stock which makes a welcome comeback, which is Zephyr Energy. Here we had a great end to the week, just nudging that 200-day moving average, looking for at least 3.7 pence by the end of this month within that broadening triangle from October, and hoping that the shares will remain above the February resistance at 2.6, above 2.6, looking for 3.6 or 7 by the end of next month on Zephyr. But it looks as though we have a turnaround there, and backed by bullish divergence as well, an uptrend line in the RSI window. That's it for me today. More updates during the week.